Good afternoon, everybody. This is your market update for June 13th. And well, we had a solid inflation report come out today. The CPI report, Consumer Price Index report that shows inflation on a consumer level, actually came in showing inflation numbers that were lower than what the market was anticipating, which was initially good for both the stock market and the bond market. Stock market opened higher across the board and has continued to rally throughout the course of the day. Currently, the Dow is up 122 points, NASDAQ up 88, and S&P 500 up 25. Mortgage-backed securities on the day initially opened with the positive news for the inflation numbers being lower than anticipated, up 16 basis points. And at one point in time, I think we're up as much as 25 basis points, but really running into that continued level of resistance that we keep hitting. And has wavered a bit, currently down 34 basis points, so over 50 basis points lower than where we started. I do think that very well may be because stock markets had several good days, investors pulling money out of the bond market, putting it into stocks. That's not uncommon. We could very well see a rally back this afternoon in the mortgage-backed security market too. That hasn't been outside the norm here as of late. So we'll wait and see what happens. Remember, we still have a lot of information coming out this week that very well could be friendly for the bond market. So we could see some further improvement in the mortgage-backed security market. We've got the PPI report coming out tomorrow, which shows inflation on the wholesale level. We've also got the Fed statement coming out tomorrow at the culmination of their meeting where they give a good idea of what they're doing with rates this go around, as well as hopefully some kind of indication of what their plans are moving forward. I think with the CPI report that came out this morning, it's pretty much solidified the fact that the Fed's going to pause on the rate hikes this go around, but their market's going to be looking very closely at what their verbiage is in regards to their plans for future meetings and future rate hikes. We also have the retail sales numbers that are coming out on Thursday, which I feel like the market's pretty much banking on the fact that that's going to be a weak report, which will also be potentially friendly to the bond market. So we'll wait and see what happens. We'll keep you guys updated. Still a lot of information left to come out this week that could help with improving mortgage pricing and bringing mortgage rates down a little bit. So keep your fingers crossed, say a prayer, and I'll see you in the morning.